there's still many macro factors that are pushing investors to reconsider digital assets, including the current geopolitical and economic uncertainty, concerns still prevailing around COVID-19, stimulus-based inflationary concerns, and of course a much weaker US dollar. But it's for all these reasons and others that Bitcoin is now being seen as a true safe haven asset, a digital gold, as you say. But Dan, you and your viewers, you've heard all this narrative all before. I'll admit that. But what makes this most recent rally different from rallies of the past is the sustained momentum. Bitcoin has steadily climbed through several key thresholds over the past month, including the fact that Bitcoin's market capitalization, arguably a metric that is potentially more important than the price itself, hit an all-time high yesterday when the total market cap for Bitcoin secured its $320 billion print. In previous cycles, Bitcoin was viewed by most as a social experiment and dismissed as really a misunderstood fad. But that was similar to the same way as the internet when it first started attracting mainstream consumers. Fast forward to today, however, and it is very different. Bitcoin is now a regulated financial asset that is uncorrelated with high-risk adjusted returns. And that's why we're seeing a record percentage of institutional flow enter through our brokerage and exchange platforms at OSL. Bitcoin has also received the blessing, we heard from Mike Novogratz, and also the endorsement from some very well-respected investors and traditional financial firms. As a result, we're witnessing a very different scramble than in previous bull market cycles. Admittedly, these cycles were indeed historically dominated by retail speculators, but in this phase, we're not seeing the retail speculators enter. It's really the professional investors and institutions that can no longer afford to deny that this might just be their best investment of the decade.
Well, I wouldn't be so sure about that, though, Dave. There's still a lot of retail activity in this market. The fear of missing out trade is still well in play here. Even the Bitcoin bears say they still don't understand the problem that Bitcoin is trying to solve. This is ultimately still just a tool of speculation, is it not?
I think historically, it's no longer just the crypto enthusiasts who are cheering from inside an echo chamber. You do have very well-respected investors and very large traditional financial powerhouse brands that are now actually making sure that they're adequately prepared for the digitalization of finance and ensuring that they actually have exposure to these underlying assets such as Bitcoin and Ethereum. If we want to talk about some of these examples, Paul Tudor Jones announced he had exposure to Bitcoin this month. Stanley Druckenmiller stated that he has warmed up to the fact that Bitcoin could be an asset class that has a lot of attraction as a store of value. And if we want to talk again about more data points of endorsement, a Citibank executive this week released a research report suggesting that Bitcoin could appreciate to as high as $300,000 by only next December. I guess my point is Dan, is that regardless of your own view, of Matt's view, and of your viewers, there are certainly a lot of respected incumbents that have changed their views and are now extremely confident of the role that Bitcoin plays in the future of finance.